This chart introduces a second kind of zone, the fair value gap, an imbalance a fast move leaves behind, and shows what happens when it lands at the same price as an order block. When two independent zones stack at one level, the pullback into them reacts more cleanly than off either alone. We read a quiet base, an explosive breakout that leaves a gap, and the pullback into the stack zone. The chart opens with a long, quiet base. Price chops sideways near the lows, small overlapping candles, low volume. This is accumulation, a position built quietly without the volatility that would tip it off. It isn't a signal on its own, but it's the coil that makes the next move readable. The low volume is the defining trait. The market compressing, neither side committing. Price breaks structure upward for the first time, the change of character. Coming out a long base, this first decisive break suggests the coiling is ending and buyers are taking control. It matters here because it locates the turn and the order block forms right at it. The change tells you the bias shifted. The order block tells you where the commitment behind it lives. A bullish order block forms at the change of character, the green demand band at the base, the last down candle cluster before the move up. This is the origin of the move, and crucially, it's going to be one half of a confluence. Hold on to its level. The pullback later returns to exactly here. What makes this chart distinct is what stacks on top of it next. Price explodes out of the base. A single large expansion candle launches off the order block, and the volume panel shows a massive spike on that candle, one of the largest on the chart. This is accumulation becoming markup, and the volume confirms it. A breakout from a quiet base on a huge spike is institutional commitment, not a false move. And because the move is so fast, it leaves a fair value gap, an imbalance just above the order block. The imbalance is now on the chart. Markets tend to return to fair value gaps, to rebalance, to trade back through the skipped levels before continuing. So the gap becomes a magnet. The next pullback has a specific level it's likely to seek. And here the two concepts combine. The pullback isn't heading toward generic support. It's heading toward a level where two things sit: the unfilled gap and the order block stacked close together. After the breakout, price pulls back sharply, heading straight for the stack zone, a fast move back toward the origin. To a trader watching price alone, this looks alarming. The breakout appears to be failing. But the Confluence framing says otherwise. Price is returning to a level where both the gap and the order block sit, exactly where a pullback in a real markup should find support. The frightening drop becomes an anticipated test. The pullback does two things at the same level. It fills the fair value gap, trading back through the skipped range, and it rejects off the order block, the demand zone holding as support. This is the reaction point the chart marks. A gap fill is one reason to expect a reaction. An order block hold is another, and when they coincide at one price, the reaction is cleaner than either alone, because two separate mechanisms point at the same level and price reacted off both at once. From the Confluence, the markup resumes. Price turns back up off the stacked level and continues the uptrend, confirming the pullback was continuation, not reversal. The gap filled, the order block held, the trend re-engaged where the Confluence said it would. Each piece built on the last, volume confirming the breakout, Confluence locating the pullback, resumption validating the read. The markup runs to the cycle peak, the highest higher high on the chart. The trend that began at the breakout and tested at the stack zone extends to its high. This is the payoff leg, and it validates the whole read. The accumulation resolved into a genuine markup. The confluence caught the pullback, and the trend delivered its full leg from the origin to the peak. At the peak, the character changes again. Price begins printing lower, highs and lower, lows, the structure rolling from markup into distribution. The uptrend the confluence launched has run its course. The same tools that mark the markup start, the change of character, the roll from higher, highs to lower, highs, now signal its end. Every trend ends, and the rollover is the marker of this one ending. 3 things to carry from this chart. Confluence beats any single zone when a fair value gap and an order block sit at the same price. A pullback there has 2 independent reasons to react. An explosive breakout creates its own reference. The same candle that confirms the phase change leaves the gap the pullback later fills. And the scary pullback into a known confluence zone is often the test. Not the warning. The depth looks like failure, but the level is where the structure said the move should resume. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.